Good morning, everybody. Welcome to our Thursday Q&A discussion of British American Tobacco. We've got Ross van Coller, our equity analyst, who covers that stock for us. He's going to highlight some of the numbers for us, and then we're going to have Shaun talk to us about the technicals, and then we're going to take a quick Q&A. Thanks for joining us this morning. Ross, if you want to take it away, you're welcome.
Good morning, everyone, and thanks for joining us on this Thursday morning. I'll be taking you through British American Tobacco on the back of a trading update at the end of 2023, that was in December, and then their results, which have just come out last week today. So we'll get right into it. Just to summarize everything that's happening in the world of tobacco, in terms of the macroeconomic environments, I think we're all aware of the fact that cigarettes are in a perpetual decline. Every year, cigarette sales, in terms of volumes, are going down by about 3 to 5%, more so in the United States than the rest of the world. And we've got the issue that both British American Tobacco and Philip Morris are now facing with the illicit vapes coming in from mainly China, which are affecting the rules and regulations that these companies are trying to navigate. With regards to our valuation, I'll get more into that a bit later, but we do see some upside with British American Tobacco. They're trading at multiples that are well below their long-term averages, and specifically British American Tobacco is a lot cheaper than Philip Morris. Their results came out last week. They were slightly disappointing, but there was one or two very important comments by management. From a sales point of view, they were down about 1.3%. But when you adjust that for the exit of their businesses in Russia and Belarus, as well as currency fluctuations, they were actually up 3%, which was at the lower end of their guided range of 3 to 5%. But the most important thing that came out of that was a comment by management on a partial sale of their stake in the Indian Tobacco Company, or ITC as it's now called, which I'll touch on a little bit later. And then at the end of December, for those that didn't join us in the middle of December when we had another one of these calls, they impaired their cigarette business by about £25 billion. This was on the back of their 2017 purchase of Reynolds America of about 50 billion. So they have now impaired that by 25 billion, and because from a prudent point of view that they obviously see cigarettes in the next couple of decades will slowly fizzle out, which I think is fair, and it's just a prudent way of just adjusting the accounting. So as I mentioned, we've got a bit of an upside. Sorry, can you just go on back? We got a bit of an upside of about 26%. That's to the British pound value, as all their results are reported in pounds. And then I've just highlighted some easy wins. I put them in inverted commas there because it's not that easy, but something that could move the needle, and that would be a change of listing. They're currently listed on the London Stock Exchange. So if they change that listing to the New York Stock Exchange, which would give them entrance to the S&P 500, you would obviously see that's a lot more liquid markets, and you would see some flows as the indexes have to buy the share to put it into their tracker funds. I mentioned the partial sale. This was something I mentioned in December, which now seems to be coming to some fruition, but I'll touch on that a bit later. And then also share buybacks. The shares trading at lows for the last 6-7 years. So buying those shares at a cheaper valuation would make sense. And they did pause their share buyback scheme, so a resumption of that would obviously be positive. I'm just going to run through these quickly because it was mentioned to me that not everyone knows what the next generation products are. These are essentially your risk-reducing products. Obviously, the studies have come out. Obviously, cigarettes are a lot worse for you than these products. These products are not healthy for you, but they are healthier. And they basically fall into 3 categories. The first one being heated tobacco products. And on side by side, I've just got the 2 examples that you would see in your local tobacco shops. IQOS or IQOS is the one that you'll see in South Africa. I am yet to see the glows in South Africa, but that is British American Tobacco's product. And then if you can jump over to the next one. I think this is something we've all seen in our day-to-day lives, wherever you are, sporting events, restaurants, wherever people smoking vapes. On the left is British American Tobacco's vape, which is Voo's, which is quite popular in South Africa. And on the right is Philip Morris's, which I also haven't seen in South Africa. And then lastly, in the next generation products, this is probably the highest growth in terms of volume for both of these companies. British American Tobacco's Velo, these are modern oral. They're essentially nicotine pouches that you put under your lip. And yeah, these are growing for British American Tobacco at about 36% a year, and Philip Morris sold about 400 million cans last year, up about 76% year on year. So obviously these are the things that are sort of driving the risk reducing product range. So I'll just, now that I've mentioned that, this is just something that I've came out of a Standard Bank research report, which I quite like, just highlighting over the last 5 years how British American Tobacco's market share has changed with regards to these products. Up until the last year, you can see now in the US, US vapor, about 46% market share. Those are the Voo's vapes that I just mentioned. The slight reduction in their modern oral. And the concern would be the tobacco heating product, which is sort of stagnated. Outside of vape, that's the second biggest one. So at about 18%, they have highlighted this, and they are moving towards new product launches this year. So hopefully we can see a bit of an uptick in the market share for the tobacco heated products. Just to touch on the illicit vapes, this is something that's been highlighted in both British American Tobacco and Philip Morris, and Imperial, in fact, and Altria. Essentially, I'll start with the top chart, which is something I've taken from Tobacco Insider, which is a nice tobacco blog that's run. You can see from 2014 through to 2023 how the dynamics have changed. From 2014, the total is 13.5 million. That's users in the US of ages 21 and over. You can see those are people who vape and smoke, and people who just smoke being 4.4 million in 2014. And that number's all gone all the way up to 11.5, let's call it, by the third quarter of last year, with a total of 16.5 million. So there's very much a trend as people focus on a healthier lifestyle towards vaping and modern oral and tobacco heated products. And then at the bottom, sorry, just one back, at the bottom there, I've just put that there so that you can see how what is happening in the US is they are having a huge influx of these vaping products that are not FDA approved. Therefore, the risk reducing effects cannot be verified. And essentially how the Chinese are getting this through the ports is the FDA issues notices to block these, to sanction these products as they come in from the ports, so they get seized, and all the Chinese are doing are changing the name. It really has been that simple for them. So it started off as Alf Bar, that got banned, then it was EB Design, that got banned, and then EB Create. So British American Tobacco is hoping to receive some more updates from the FDA. They said in the first quarter of 2024, so that would be next month in March, and hopefully we can sort of see a trend in the right direction towards these the sanctioning of these illicit vapes, which will work in both British American Tobacco and Philip Morris's favor. So this is just a quick breakdown of the revenue and next generation product growth. You can see for both BATS and Philip Morris that cigarette sales are stagnating. Volumes are definitely on the decline, between 3 and 5% globally. And last year, but surprisingly, the US was close to high single digits, so between 6 and 8% volume declines. And they offset this with prices, but obviously you can only offset the volume with prices to an extent before people completely switch out of the product. And Philip Morris obviously has a larger contribution to their revenue from risk-reducing products. They're sitting at about 35% of their revenue now. And this is on the back of them transitioning to 2/3 smoke-free world by 2030. and BATS is slightly behind that, with about 50% of their revenues coming by 2035. So they still see a lot of the majority of their revenue coming from cigarettes in the next decade. This is just something I want to highlight because it has been quite topical with British American Tobacco. You can see that their debt surged in 2017 on the back of their purchase of Reynolds American for about $50 billion. It's never been a big trouble to a huge extent, as you can see that they could still cover the interest quite comfortably, but their target has always been 2.5 times net debt to EBITDA. And that came in slightly short at the end of last year. They're at 2.57 times. So and the target was 2.5 by the end of the year. But I'll touch on more of that now. But you can also just see that their debt profile, most of that debt sits in 2034 plus. So they, on average, is about £4 billion a year that they're paying down this debt. But they have a huge free cash flow, so it's not really an issue. It's just something that we like to highlight because you can see that their interest coverage is now at, let's call it 6.5, which is well above the 2.5 to 3 times coverage ratio that would start bringing in concerns. So this is just the ITC stake that I wanted to talk about, because the share price surged about 5% on the back of their results. This seems to be something that not many people touch on, but essentially British American Tobacco has a 29% stake in ITC, which started as Indian Tobacco Company about 100 years ago, and now they're quite a conglomerate. They deal with hotels, packaging, paper, so it's very well diversified, but doesn't really fit British American Tobacco's tobacco model. So you can see that now that their market caps are almost identical. So with a 29% stake in the ITC, that would equate to about £15 billion. And they still want to maintain voting control in that company, which is at about 25%. So if we take the difference, 29 to 25, that's 4% sale down that we can expect. And that would generate about £2 billion, which will be used to pay off the debt, bring it below 2.5 times, and then they can resume their share buyback program. There's obviously a lot of regulation that is an issue with regards to that, because the Indian regulators do not allow foreign investments into tobacco companies, so they would have to find an internal buyer for that stake. But it shouldn't be an issue if they're only just paying down a partial percentage of that. This is just where these companies stand in terms of their peers. So you got BATS at the top, then Philip Morris, then you got Japan Tobacco and Imperial, which are the only 4 real global players in the tobacco industry. And if we cast our eyes further to the right side of that table, you can just see how British American Tobacco and Imperial are trading at low multiples to Philip Morris and Japan Tobacco. So at an EV to EBIT of about 7 and a PE of 6, it's relatively cheap. They've got a 9.5% dividend yield. So you get that. Part of that, if we look to the bottom of the table, you can see it's derated quite materially from about 20 in 2017 to about 7 now. Part of that is justified due to the general trend of tobacco, but we still see a lot of upside in this stock. This is just a brief summary of how we get to our valuation. So consensus EBITDA for 2024 would be 13.3. I've got it a little bit below that. But even with our conservative estimates of 7, 8, and 9, and a slight favoring of the bear case, just due to the cigarette volume decline in the US, we still have a 26% upside on the current share price. So we still see a lot of legs to grow in this stock. I think that brings me to the end, and I'm going to switch over to Shaun to discuss the technicals now with you.
Thanks, Ross. Yeah, Shaun.
Okay, where's the chart? There we go. Cool. Good morning, everybody. Thanks, Ross, for a very comprehensive overview. I've learned a lot about the British American Tobacco now. So yeah, you can see the share price here of British American Tobacco, or BAT. It's trading below its 200-day moving average. And the long-term trend remains bearish. The share price is also trading below that long-term descending, what I call resistance trend line, and also confirms that bearish trend. In the medium term, the trend is bullish. As you can see there, the share price is trading just above its 21-day and 40-day moving averages. Share price needs to break up through that, call it the previous support resistance zone between 591 and 599, as well as that resistance trend line I was just mentioning just now, before this long-term trend can be called bullish again. Saying that the MACD indicator at the bottom there, that oscillator, it is trading in overbought territory, but it's not giving any clear sell signals yet. But the stochastic indicator is bearish, and that's a bit more shorter term. So yeah, the share price this morning or today has opened about 25 basis points, or 0.25% lower, and our last look was trading about 573. And as Ross said, now it's giving you about a 26% discount to its intrinsic value. But saying that, anticipate should pull back further on some profit taking, as we're seeing now recently. We could expect it to test that short-term ascending support trend line, about 560. And possibly even a bit lower at that 550. So that even be a bigger buying opportunity to those lower levels. So yeah, great company with a great dividend yield, but a bit of a neutral trade at the moment. That's how I see it. Thank you.
Thank you very much, Shaun. Yeah, looking at the technicals, I think this since December we've definitely had a bit of a push. And Ross's evaluation really shows us that there's quite a bit of potential there. I'm amazed that people are consuming so much nicotine. I mean, I honestly thought in my mind when we stopped smoking cigarettes and you see less people smoking cigarettes, I see a lot of people with vapes, but it's not as many as what I used to see with cigarettes. Well, that was my impression in my mind, but I'm obviously wrong. I mean, these guys are killing it. So yeah, interesting the comparison you did for me between Philip Morris and them, to show that that the percentage of tobacco smoking in Philip Morris is more than with British American Tobacco, which is encouraging. And yeah, like Shaun said, the stock's really nowhere at the moment, but if it goes above that 599 level, and breaks above that support resistance zone, then it could actually do quite a bit of running. So keep an eye peeled on that. I'm going to open the floor for questions now. You're welcome to ask it in the chat, or you can switch on your mic and ask them outright, and hopefully Ross can answer them for you. Let's see if there's anything in the chat. Nothing at the moment. Anybody want to ask a question? Just switch on your mic. Ross, it seems you've covered all the bases, mate. So we got a bear case of $25, which is above the current share price. We got a base case of 31, which is up 26%, and then we got a bull case at 37, which is a heck of a lot higher even. So yeah, I think let's keep an eye on the technicals, keep an eye on this, and there may be some potential in British American Tobacco. Definitely, if you do have it in your portfolio, there's absolutely no reason to get rid of it. Are there any risks associated with a class action lawsuit related to losses stemming from the impairment of the US tobacco business? Neil says.
Sorry, can you just repeat that question?
Are there any risks associated with a class action lawsuit related to the losses that stemmed from the impairment in the US tobacco business?
Personally, I do not think so. We've seen this before. This lawsuit has come out towards the end of last year after their trading update, whereby they obviously impaired the business by about £25 billion. So the lawsuit as it stands, is claiming that management painted a much rosier picture leading up to that than what was actually the case, which I don't think is quite that true. They've always highlighted the risks, and that business was sitting on the books at quite a high value as the share price had come down. So now what they've done is they've taken that cigarette business and they're going to amortize it over about 30 years, which is a lot more prudent. So they'll take a once-off knock, and then going forward, they'll just amortize it out over 30 years. So for me, it just seems like a few disgruntled investors who claim that they were hoodwinked, but they're reaching out to the public now for everyone to come on board with it. And I don't really see any impact going forward. The knock has already been taken. Management was not selling any shares before they made this announcement, so all the stock-based compensation was still tied into the share price. So they took the same ride that investors took. So it's going to play out over a while, but I don't see it as being material. It's just, in my opinion, just a lot of noise in the meantime.
Thanks, Ross. That's a very comprehensive answer. Let's see. Any last questions, guys?
Can I ask a question?
Yeah, of course. Please do. Leo, go for it.
Yes. I was just ask Ross, say over the next 5 years, does he feel that a 10% increase in the dividends annually is feasible?
A 10% increase?
Yeah, in the dividends going per annum.
Yeah, I don't see them specifically increasing the dividend by a specific amount each year. But the thing is with these tobacco stocks, and in fact a lot of consumables, but tobacco is a very, very defensive stock. And this company generates a lot of free cash flow as it is. So if I just think off the top of my head, they were about, in the last 5 years, they were going at about £6 billion per year in free cash flow. And now they projected for the next 5 years to do about 40. So if we take that, that'll be about £8 billion a year. So obviously the dividend yield is tied into the share price. So you might see that dividend yield come down, but they don't have any necessary reasons to be cutting their dividends. Their debt is, while it's large, it is very much under control. And they've got very, very clear plans on how they're going to pay that back. So once it's down below 2.5, they said they're going to return the cash to shareholders, but we'll likely see that in a share buyback over a period of time, and then they'll probably increase their dividends as that debt comes down. But in terms of exact percentages of increasing dividends, it wouldn't be fair to me to say, yes, I expect 10% per year for the next five years or so.
Okay, thank you.
Sure, thanks, Leo. Anybody else? Doesn't look like it. Oh yeah, there's Bobby. Do you have buy and hold, given all the negative view? Sorry, I missed the point if made. Yes, Bobby, we have a buy and hold definitely on it, because we have brought out a buy recommendation on it. We think the stock's undervalued, but we always say this to the short-term traders, that the research stuff that Ross and them do is for inclusion in our own portfolios that we manage, and that obviously has a long-term view. So it's definitely a buy and hold strategy that we're talking about here, and on a buy and hold basis, we think there's a lot of upside potential in British American Tobacco. In the short term, like Shaun's technical showed, there is a zone where the thing can pull back to around 560, and then if it does then break through 599, it could run quite a bit. But so 560 would be a good technical buy level. But the current levels are good for inclusion into a portfolio with a long-term view. Yes. I also hope I'm right, Bobby. Thank you for that comment. This market's been fairly difficult. I don't see any other questions. Ross, thank you for your time. Shaun, thank you for your input and your technicals. Guys, thank you for spending some time with us. We hope you have a fantastic Thursday, and we'll see you next week. And as usual, I do not know what we're talking about next week. Shaun, do you?
PPC.
Let me check. I'm so sorry.
I think it's PPC.
Is it PPC? Okay, great. We're talking PPC next week. Richard says thank you. Jean-Paul says thank you. And I thought I saw a hand, but now it's gone.
It was meant to be a thumbs up.
Okay,
oh,
perfect.
sorry. Well done. Thank you, team.
Perfect.
Great presentation as
Thanks,
always.
guys. Have a fantastic Thursday. Cheers. Bye-bye.
Thanks, everyone.